OMG market analysis for beginners. I'm a beginner, and this is just the stuff that I can remember that I've seen in recent videos, anything that has popped into my mind over the last month, year, 5 years, 30 years. I don't know. So we're going to start with a coming week. We've got Monday coming up. We want to know, what is our current momentum? Because we don't want to trade against the momentum unless we know what we're doing. What is momentum? Trends? Is there a reversal? Is the market undecided? How far away is doomsday? What's doomsday? Doomsday is Fed, okay? Fed is going to make a rate hike or not in September. That's a long way away. So why did I come up with this? Because when they did their last rate hike and it crashed the market, it was like, hey, we have a whole hour before our head explodes. We can go shopping. So what happened? We had a huge rally, huge. And it was so big that we actually broke out of the bear market technically for like one day, okay? According to the lows from the last few months, not according to the lows from all the way in 2020. Okay, did our owner just loosen the leash? It's just like when you're about to get back home, which is the worst time for your dog because they want to stay out there forever. But you're like, here, run for a little bit. They're happy anyways, even though they don't know that they're about to get yanked back in anyways. That was my idea on that. I want to talk about moving averages, which is the simplest indicator that any person could ever put on a chart. Then we're going to go through reports, just to start getting used to looking at them. We don't know what they are. We don't know what they do. We don't know how to forecast on them. We don't know anything. But we should look at them each day and go, huh? And they shouldn't all be social media crap about, how many people Musk knocked up, right? That's not really what we're looking for. Okay. This is about a report. If you read a report about inflation or retail sales, or quite frankly, what the Fed does, right? Because it's like, okay, what was the expected? Oh, and primarily fundamentals, like a company reporting of income. Okay, it doesn't matter if they reported terrible fucking losses and they sound like they're about to go bankrupt next month. As long as it's better than what was forecasted, everybody thinks that's good. Walmart was forecasted to lose billions this month, but they only lost 1 billion. Stock market goes crazy. That's what I'm talking about. As long as they beat the forecasted number, it doesn't matter how bad it is. Beating bad expectations is good, okay? That's how the market acts sometimes. This is technicals things, breakouts, bounces, retests, charting. This is about charting, monthly, daily, hourly. Always remember, when you're looking, you get smaller and smaller. We want to look at the 5 minute, 2 minute, 30-second. Next thing you're looking at 30-second. When I was trading crypto, I was looking at 30-second in 1 minute, and it was crazy. And it's like, I never thought to go back to the monthly. What is monthly? Next thing you're looking at all the way back, a decade back. It's really good. We're going to look at that volatility and options pricing and volume, something I'm still an enigma to me, but we got to be thinking about it all the time because it's important to put the movement within a frame. Okay, on to this is my first ever analysis stream. It's for practice purposes only. And I haven't launched OBS in a while, so that's what I'm using for my stream. Let's see where we got here. First thing is to go to finviz.com, and I got this. This is very common. This is what the big streamers use, and also I think I saw it on Shadow Trader most recently. It's like you open it up, homepage, you got today's tickers. Not really the best thing to look at, because you're like, oh my God, look what nothing. It's one day, okay? However, this was a rather significant day, as you can see, all in the morning. Differences between these, the NASDAQ, the S&P 500. The NASDAQ is an actual trading platform. It's a market. The S&P 500 is not a market. It's an index, kind of like an ETF, although not really. Okay, and the Dow is an index. Okay, the NASDAQ is not an index, but there is an index called the NDX and the QQQ, which are basically the indexes of the NASDAQ, but the NASDAQ is a market. So this is kind of like three things that are not the same thing. Tickers, top gainers. You know, if you want to scan through these, top losers, somewhere Bed Bath & Beyond is in here somewhere. There it is. Those sorry suckers. Sorry, man. But the GameStop guy sold all his stock in Bed Bath & Beyond. Why would it run up like that in a market that's really, well, we're not going to get into that. Who cares? Okay, so this page is cool, right? First thing we can go through here is to the news, which is just this really simple double list of news. And if you look at it, within one day, there's only like 30 things on each side. Blogs, news, I don't know. Anyways, so it's not that hard to kind of scan them all. What do we see here? Mexican court, 5 reasons bull run stocks may be about to morph back into a bear market. No duh. Like I said, they let us off the leash, even though we were never off the leash. They let slack out of the leash because they went and did the 0.7, 0.5 rate hike, and then they just kind of walked off. And we chilled and we were like, ha! It's fucking open season, run, right? That's what it was. And then it was like, oh shit, we're still on this leash. Okay. So now we're getting yanked in. HBO pulls nearly 200. Okay, that's whatever. Maybe someday we'll care about this. FTX grew revenue. Yeah, FTX is a crypto platform, and the SEC, I believe, is saying, hey, you guys need to not do what Binance did or these other, give everybody too much leverage, tell them their money is protected. And then if you screw up and go bankrupt, you're not, there's no protection, right? Some crazy ass version of that. Threat of energy shortages. Yeah, that's been going on due to the war in Ukraine. And for Europe, there's no energy shortage here. Cheap clone, at least not yet. Cheap clone ETF, sucking billions. I don't know what that means. That's interesting. Never heard of that, really. Grain deals, that's world news. Mitch McConnell, whatever. T-Mobile merges hedge fund favorite. Interesting. So all these stocks, so you just do that. You say, do I know what that is? Do I know what that is? And then maybe you click on one and read. Like each day you get a little bit more. Don't spend too much time on it. Blogs, CNCN War, okay, car wash business. Car wash, well, think of Breaking Bad. Investors pursuing holy grail of, I don't know what that is, but these ones with the zero are zero hedge. And the cool thing about them is that they are, well, there you go. There's an ad. But I thought they were fairly simple articles. They don't have like too much crap on them, which is kind of nice, but I don't know about that. FBI, Mar-a-Lago, that's the Trump thing. Energize your stock portfolio. They're saying buy energy stocks. So this is something to start thinking about, because it's not, if we don't care whether people who have long-term portfolios are trying to make a decision about getting the energy. We care that it becomes a trend, that, oh, that's the new thing. Move into energy. Everybody's like, move into energy. And you're like, well, that means it's going to go up. So I need to buy calls or whatever. If the calls are affordable, or buy some stock, or buy an ETF. Realtor.com, blah, blah, blah. Inventory up 27% year over year. Weekly inventory. Okay, so that's a bad report, right? Well, in a way, inventory is up. If somebody wants to buy a house, that's nice. But what that means is that people suddenly the prices are gonna, there's more supply, so prices are gonna drop on homes, which is going to make the inflation numbers look a little lower, because a lot of things make the inflation numbers look a little lower because we're falling into a recession, blah, blah, blah. But these things are things you can think about. How does that affect this? Why is it the reverse of what you think it is? Inventory is up. That sounds good. No, it's not good. I mean, it is good if you're tired of inventory being strapped because it's stupid, but it's not good for the housing market's numbers. Okay. Blah, blah, blah. So you look through the news. So that was the news. Next thing we're going to go to is, let's see, maps, groups, futures. We're going to do a few of these. Let's go to the whatever's what's next on here. Map, S&P map. We've all kind of seen this map. We don't know what it is. You don't need to know everything. You need to know how to dissect or analyze this. You just need to get used to looking at it and be like, I have no idea what that is. I have no idea what this is. Why is this a big square and this one's a little square? Okay, Deere, John Deere. Oh yeah, they're involved in, well, they're obviously a big company. They're also in farming, but they're also involved over in the situation in Ukraine. So they're getting a lot of press, or they were a couple months ago. I don't know if they still are, but they're part of the farming sector. I didn't even know farming was a sector. Okay, energy is over here. What's XOM? I've never bought it. Oh, that's ExxonMobil. I thought it was an ETF. Now I know. See, I'm a beginner. How do I not know what that frickin' ExxonMobil Corporation ticker is? Okay, it's probably the most decorated company, in a bad way, in all of U.S. history. And here it is. I'm like, huh? Okay. Chevron, right. Oil and gas. So two big squares there. Some of them have a lot of little squares. What this is the market cap. Apple has got a huge market cap. That's why they have such a big square in technology. Microsoft has a pretty big square too. These little squares are smaller companies that are big players. Oracle's a big player. Adobe's a big player. Synopsys. Who the fuck are they anyways? Fortinet is, they make firewalls and security equipment like Cisco. VeriSign makes this SSL certificates you see on web pages. Akamai is a security company, firewalls and cloud infrastructure. This is obviously my area. Norton, LifeLock, fucking whatever that is. I hope that's not semantic. I don't know. FS, I don't know. F5. Oh, F5 is another security company, I think. Okay, but we can go down through here. It doesn't matter. Who cares? We're not trading. We might not ever trade any of this stuff, but it's interesting. Salesforce, that's the software. Okay, so you can know, like, why is software more red than Apple? Well, Apple's not really software, are they? They're not even really technology. They make products, phones, and they are technology, but they also are in banking, right? Apple Pay. Everybody pays with Apple Pay. How big is that? Is that bigger than their phone market? How much money do they make off Apple Pay? It's not technology, it's banking, okay? It's like PayPal. You don't see PayPal in here, right? So Apple's kind of all over the place. Healthcare, blah, blah. So heat map, let's move on. News, we covered. Futures. Back to heat map for a second. I just want to make sure I had scrolled down and got everything okay. Futures. This is good to look at if you don't know anything, because, well, it's good to look at if you do know something. If you don't know anything, it's still kind of good to glance at, to get used to looking at it. But what do we see? Oh yeah, red, NASDAQ, red. These are always going to usually be in the red together, unless they're dark red, and one of them could be dark green. Dark red and dark green mean there's a little bit of movement. Bright red means it's really bad. Bright green means it's really good. I mean, it's going up a lot. There was a big green bump here on wheat, even though it's been down, 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 down. That last ticker is green, and it's bright green. Okay, it's up 3.2% in one day. That's a lot. Okay, so what do we got? What do we got? Just get used to what are these things, and why are some red and some green when they're always red and opposing each other? These are just questions I'm thinking of. Like you said, I'm a beginner. Okay. I'm kind of a beginner. I'm a middle-aged, upper middle-aged beginner who's been around a while, so I know some things, but I'm really still a beginner. I'm not an expert. Just because some beginners are dumbasses make me look like an intermediate, that's fine. I'm not going to call myself that. Okay, metals, currency. USD's been good, even just in the last 3 months. It's been good for a long time, and it's already going back. This is an interesting one because when US currency goes up, that is not good somehow. I'm not gonna, I don't have a full paragraph to explain all that, so I'm not gonna try. Go down here to the sectors. First thing we see, bam, VIX. What is VIX? It's not wheat, it's not rough, it's nothing. It doesn't even really belong in here. VIX is volatility index, okay, of basically the S&P 500. It's a volatility index. And when it goes up, the market goes down. And when it goes down, the market goes up. They're inversely report. And so we had this big summer rally. It was really big, significant. And this is the VIX going down because everything is not volatile, not volatile. I think it's just nice chugging really steadily up. We don't get this crazy. And as soon as we got this week, some big drops, that was a reversal. Look at this gap. It's a huge jump in the VIX. We're back up to 24. So you can tell what the markets did just by looking at the VIX. But this is also important because that'll tell you right now how your pricing for your options is. If you were looking at a price of an options and you had a plan out yesterday or last week and the VIX was here and now the VIX is here, your options are going to be more expensive. Okay, that's just a flat out statement. They might be too expensive. You need to look at what your break-even point is and be like, am I really going to get to that? Strike price isn't really, strike price is technically important for how you can execute it, but whether or not the break-even point is what matters, because that's whether you lost or made any money. So VIX is a great chart to start getting used to looking at. Okay, we had low volatility, it went up and then it went down and went up and now it's well, actually this is what you would call a derivative of the volatility index. We're not going to get it. This is for beginners. Now I don't even know what that is. I just use the word derivative because I took calculus in college. Anyways, let's move on to the group screener. We didn't go into this, sorry. This is which sectors are the winners. Now it's the same as this, except it's really a much more useful, or it's a different look. Lumber. Okay, it's just a different look at how the graph looks. If they're all kind of flat or if there's a big dip. Okay. Okay, I'm gonna move on. Futures group screener. Okay, healthcare, 1 day relative performance, 1 week relative performance of the sectors. So this is nice to just jump back and forth from. So you can see healthcare has been had a big down week, but it wasn't down today, that last day, Friday. Okay, consumer cyclical was really badly down on Friday, but it was also down for the whole week. Okay, you should learn what consumer cyclical is, because if we click into it, we can see what the difference ones were and whether they did, which ones did bad and good. We're not going to go into that. Okay, so that's the group screener. So let's go to charts. We're done with that. Let's jump back to my cool page I made. Breakouts, bounces, monthly, daily. We're going to go look at charting, monthly, daily, hourly. Breakouts, bounces, retreat, retest, sorry. But my laptop hard drive doesn't fill up. S&P 500. This is your basic chart. I want to talk about how these work. What are these bottles? Okay, it's confusing because you can change it here. It doesn't matter what anybody thinks about whether they think it's confusing. I guarantee you it's confusing. I've worked in software interfaces my whole life. You got to change here, 15 minute. You got to change here. You got to zoom. Okay, and it's like, well, why can't I just use the zoom always? Why do I have to use this? And why does this not change this? But if I put this on 1 minute and I click this, that changes. But if I change this, that didn't change. And now I can zoom and I'm seeing more than 6. It's like, that's fucking confusing. Okay, the period is right here. This is just the same as zooming. It's kind of like showing you what's on the screen. If you change it, it's the most easiest thing. It's the most intuitive thing to change. It tells you what range you're basically interested in. And then it changes this to a thing that is basically probably the most commonly used one for that time period. Okay, 1 day. Hold on a sec. Pause. Okay, back to it. This is your period. No pun intended, okay? Your 15 minutes chart, when you listen to these guys and they say, well, let's look at the 30 minutes chart, let's look at the 1 hour chart. Okay, when you're looking at a daily chart, each bottle is 1 day. So it's probably gonna go back a month, 2, 3, 4, and 5 months, whatever it is, daily chart. I can be a daily chart and go to 1 day, which doesn't make any sense. And so it jumped me to 1 bit, but I can still switch it back to 1 day. Okay, now this is what a 1 day daily chart would look like. It would just be this one square. You wouldn't have these squares because you're looking on a 1 day range and you've got each bottle is 1 day. You'd only have one freaking thing. So that doesn't make any sense, right? So when you're on a daily chart, each thing is a day. I could look at the same range back to March and I could set it for 1 hour. If I zoom out, I got all the way back to March still. This is the same exact chart, except it's just got a lot more of these tiny little things because it's 24 little things instead of 1 bar. And obviously that's hard to see. And you're zooming in and out and you're forgetting what you're looking at. So you just want to, okay, 1 day. This is the daily. It goes back usually about 6 months. Let's look at this one first, okay? Because you got to remember where we just had a big setback in these last 5 days. We had a big run up. We feel like we don't know what's going on. Let's just chill pill. Let's add an indicator, moving average. This is as far as we're going to go. We're going to do 20. What does that mean? 20 days. Our period is 1 day, so that means 20 days. And it's like, yeah, but our line's going back, 180 days. That means that it's only, the average is calculating it off the data from the last 20 days. Each point in the line is the average of everything from the last 20 days. And as it goes, it slides forward and forward. If we do but this doesn't mean 20 days. This is 20 periods, and then we have our period set to 1 day. So if I have that on 20 and I change this to hours, now that's 20 hours, okay? So it's above the current price, right? But if I change it back, and I know this is getting confusing, to days, now it's below. If the price stays exactly at the same price for 20 days, then the line will be stuck on that price, okay? So this is what was happening. I got this from Shadow Trader. Let's talk about the market now. Okay, this was the market on Friday, on Wednesday. And let's just do that. Who's going to say that that's going to come down, right? We don't know. That could be going up and up and up and up. You could get a big bow here on the 20-day, and this could go like that, right? But suddenly it brought back down. In Shadow Trader, that what they were saying was, why did the market correct? And this was one of the things. Usually in the 20 day, I have it set to day and 20 periods, which are days. It's going to find its way back to it at some point. If you look back, it goes up, it touches, it goes, it touches, it touches, it touches. You see it, it's always touching the 20-day after a while. Look at this one. Really made it far. This one is what we just had, and it was huge. This crash one, it found its way back up, right? So they were saying that's just a technical reason why the market would reset, and it still hasn't made it back. That's important. So let's add another indicator. Moving average, let's go to 200 day. Okay, what does the 200 day say? Wow, that's a weird line. Okay, that means we were floating above it forever until it touched, and now we really dipped above, and then it came and touched real fast. So who could predict that? But it keeps you remembering that we are still below, even with this huge effing rally, which for people who liked short market, the market was absolutely brutal and took a month and a half, right? Well, a full month. That entire time we were down. We weren't up. We never got up. We touched the 200 rally, the 200-day moving average, right? Just touched it. And then that is called a retest, right? It tested it here, it got above it, it tested it here and fell down. When did it test the 200-day average again? Never. Never in here, never in here, never here. It just tested it a few days ago. And it got rejected. That's a rejection and a test. Okay, so we covered that. Volatility, we covered volatility, and volume. I don't know anything about volume either. I just know that if we have the RSI indicator, relative strength index, which we'll maybe go through in another thing, so you can slide this chart. You can be like, look, this is what it looked like on Wednesday or Tuesday or Wednesday. And what would I have thought? I see all this, okay, this high green bar. When was the last time I had a green bar that high? Back here, right? And look what happened. It flattened out. It didn't go down. Okay, when was the last? Well, we had a really high green bar and then reset. Really high green bar. Okay, so this is, when you want to look for a bar that's that high, that's a really high buying day. Okay, and you think, okay, well then what happened after that? Well, in this case, it kept going up. It had one red day after that, actually, but it kept going up. But that just means there's a lot of momentum in the market. That was another thing we're going to talk about. How much momentum do we have? I don't know the answer to that question, obviously. But when we're coming back, do we still have upward momentum, or are we creating downward momentum now? Well, it depends, but this is the questions you want to ask yourself. Like, where's the momentum? I don't know. How big was the sell-offs? How big was the red bar? If the red bar was huge and it only made it to there, if it was, let's say the red bar was this high, one of the highest bars in months, and it only made it to there, that means there's still a lot of buyers, right? That means somebody was fighting that. So a bunch of sellers got their sell game on, and it came down to there. But we don't have a big bar. We only have this bar. It's not that big. And we had a green bar, and we still dropped. Okay, all the way to there. What we had red, look, green, red, green, red. If you have those together, they're about equal, but we didn't get equal. We got a pretty significant, pretty significant drop. And so that tells us that we could see more drops because we haven't used up that much of our red bars, which is sellers. This is getting fun. Anyways, let's move on to the next chart. That was the S&P 500. The NDX is the NASDAQ. You can also do the QQQ, which is an actual ETF that you can buy and sell and short. The NDX is just the index, but they're basically the same. And it looks a lot like the S&P, and they usually do. But in this case, since the NASDAQ tends to be more volatile than the S&P, we actually almost touched the 20-day, but we didn't, right? Let's put the 200-day on there. The 200 period. This is important because if you change your thing over to 30 to 4 hour, which isn't that different, suddenly these lines are completely in different spots. They're still the same indicator, 20 and 200. We were above both. Okay, that's that's a lot of momentum above. I guess that's what you could say about momentum, is if you're above both these lines for a while, you have momentum. Okay, doesn't mean you can't. Okay, let's put it back to the daily. We never got back to here. We got this one. We didn't actually remember in the S&P we touched the 200-day, and the NASDAQ we did not touch the 200-day, but we did back here. Someone might say that that's a significant. What does that mean? About the NASDAQ has more tech stocks in it. The NASDAQ is more volatile. The NASDAQ also has more stocks that trade after hours. I don't know if that means anything. Anyways, moving on, because I'm trying to get this done. This is the VIX. Okay. Short-term futures. Why did I open that? The VI. Oh, yeah, we were talking about that earlier. We had a big downward momentum on volatility, which means options got cheaper and cheaper and cheaper on the whole. Okay. Options on very volatile stocks still are expensive because they're volatile stocks, meaning a stock like Bed Bath & Beyond, which had this huge spike and then back down, is going to have expensive options regardless of what this says. Okay, so here we saw this green bar and the VIX jumped up. Ultra short. I hope I'm looking at the right thing here. Yeah, VIX. Anyway, let's move on. I don't think this is what I wanted to look at. Anyways, that's it. This is how we kind of generally look. We didn't get a look out for this week, but after you get all that information in your head, you've scanned things, then when you read, you start to weave the picture of what it is you think might be happening. Is it going to be an undecided week? Okay, are people going to be, this momentum, is it going to retest the 200-day, or is it going to fall to the 20-day? Is it going to hit the 20-day? It has to hit the 20-day eventually. It always does. But it could stay flat and the 20-day could meet it, or it could pop up and break through the 200-day. Doomsday, which is in September, when the Fed does, a lot more Fed speakers have been saying, yes, don't think that we're not going to continue to fight inflation. We are. And as we get more in a recession and the attention goes away from inflation because people really don't know, they feel inflation, but they don't always feel it right away. They do feel a recession. They see more layoffs. They get more scared. They're not thinking about inflation. And they're thinking, why are you hurting us more? So there's going to be some pushback on the Fed about, well, why are you doing this? We're already hurting and we're going into recession, and now you're going to raise interest rates. It's not good. So anyways, I'm obviously kind of a bear, but I need to learn how to be a bull at the right time. That's all. This is not one of those things that you need to like. It is just for me to get practice doing this.